So the definition of price action, guys and girls, is when a stock hits a certain level more than one period of time. I will use that in accordance with my technical analysis. So a couple of things can happen when we hit price action. Okay. Let's show a couple of examples before I go back into the market. Let's just show. All right. Okay. So here's a stock coin today. Let's go to the 5-minute chart. Okay. Perfect. All right. So here's a stock coin today. So when we talk about price action, we talk about a stock hitting a certain level on more than one occasion. That's what brings us to the price action, right? So if we look at coin, okay, we could see that earlier this morning it came down, hit my 200 EMA, right? So we have a lot of price action right here. The second time we came down and hit our 200 EMA. So a couple of things can happen here. Either this price action is going to hold for a trade because we've already visited that once, or it's going to break through that and give us a momentum trade in the same direction that it's going. So price action shows me support and resistance, especially if it hits something multiple times. So you can see the first time we hit this price action right here, okay, the move was up. So we hit this price action. We hit that price action for the second time. Beautiful. And then the third time when it hit it, it broke through. So as far as trading is concerned, I'm going to trade it the first time it pulls back to that price action, because here's all our price action. We got to bounce. The second time it goes back to that price action, I'm going to look for what we call a momentum trade. So if it breaks through that, now it's telling me that that price action is not holding at that level, and we're probably going to go lower, okay? So that's one way to use it. Another way is here. Check this out. We have price action right here, okay? That was my 65 EMA. We went all the way down, and guess what? We went right back almost exactly to this price action again. So we hit it the first time. That was support. We're hitting it the second time. Now that's resistance. Price action. Price action. So it hit us here, went all the way down, hit us here, and that became resistance, and we got a nice trade out of that. So what I'll be looking for now is this price action, okay? This was the low sale that we made of the day. So my thought and my process is based on technical analysis. If we get back to this level, we should see some support there based on this previous price action, okay? And that's what I look for when I'm using price action. A lot of people don't even use technical analysis, right? All they go by is stocks hitting certain levels and seeing if they hold those levels, you get into trade. If it doesn't hold those levels, you get on the opposite side of the trade. So that's basically the definition of price action. Let me show you a couple of other ones that we got here, just to show you how this works. Okay. Let's look at the SPY today. Same exact thing, guys and girls. Price action. It made a low right here. Came back and exactly tested that level. Price action. Held that level. Bounced all the way up. Price action. What I'll be looking for now for my next trade in this was the high sale of the day. Price action. If we go back up to that high sale of the day, I'll be looking to short for a trade. Okay. So when it comes down to support, we look to buy for a trade. When it goes up to that resistance price action, we look to short for a trade. So very, very important as far as technicals are concerned. And we use price action just to find support and resistance on charts. That's what we are looking for. Let's look at Meta today. Another one. Perfect example, right? So as you're looking at your charts, here's our first low, price action. Look what happened when we hit that second low. Right there, price action. And we hit that second low, we exactly held it, and we went bouncing back up, okay? Even if we went here, guys and girls, check out the first time we hit this. It was like 464.80. We went all the way down. Look at that. We hit 464.80. Exactly. There's your price action, and we went down $3.50 from there. So this is your first trade, bounce, bounce. This is your second trade. Second time we hit that price action up there. Down, down. Okay. Perfect, perfect, perfect. Now I won't be looking at this same price action because we've hit it a few times already, right? We hit it once, we hit it twice, we hit it 3 times. Chances are we could get now what we call a momentum trade above those levels now and maybe get us up to this previous price action. Okay. So anytime I'm using price action, I'm using it in conjunction with my technical analysis and looking for levels where a stock has hit several times. And two things are going to happen. It's going to work as support or resistance, or it's going to tell us to either get on the long side if it's breaking that, or the short side if it's going down. So I want to go back now and show you guys the SPY, because people have been, I mean, I was watching Fast Money the other day when the markets were starting to go down, and they were talking about, oh, this is it. It's the end. This is Armageddon. It's all over. Markets in crisis, right? That's all we heard from these people. And I want to show you exactly what we did, okay? Because this is very, very important to look at longer term charts, okay? So this is a longer term chart of the SPY. And we can see that every time this stock has gone up, it's pulled back to our trend line, gone up, gone up, gone up. I want to show you some price action here that was pretty incredible. So we went down from a high of 565 to 537. I had an exact moving average on a daily chart, a 65 EMA on a daily chart. So the further out we go, guys, 5 minutes, 15 minutes, 30 minutes, 1 hour, daily, weekly, monthly, the stronger those support levels become when a stock goes down and hits that level. So we went down basically like 3.5 or 4%. I can tell you guys that that is perfectly normal. I don't think we had a 2% pullback in the S&P in like 140 days. It was like one of the longest periods of time that we didn't have a 2 or 3% pullback in history. So this was no surprise to any technician in the market. We just got really overboard. But I want to show you something also when we get to this level. Check this out.
Is this the weekly one, David?
This is a daily.
Daily, all right.
Okay. But I want to show you this price action right here. Okay. This became a little resistance way back when. This is in June. In June. And we exactly came back, follow my cursor across, to exactly that level that now became support. Right here, all of this, right in this range. That was resistance where we went down a little and then broke out above, and it became support when we pulled back down there. So from a trading standpoint, when this happened, and this happened, what's today, Friday? Tuesday, Monday, Tuesday. This happened on yesterday morning. This exactly hit that level. So when I hit a big level in the SPYs like this, that's when I go to look for stocks that trade with the spiders. And I think the QQQ, let's take a look at that. QQQ got even more oversold, okay? The QQQ broke our 65 on the daily, and now it's kind of just sitting in the middle of everything. But stocks that are related to the spiders, your Apples, your Nvidias, your Teslas, they're all in the S&P 500. If we look at those stocks, okay, on a daily chart, this was very, very beautiful for us in Nvidia. So we looked at Nvidia on a daily chart, and when the spiders hit those lows, this was telling us it was a spot to grab a little Nvidia. This was around $107, and it went up like 15 points from there in the coming days after that. So, I mean, price action is mega important. I can tell you that me as a technician, it's not something I'm totally concerned with intraday, because I'm basically using my moving averages to trade intraday. But it's very, very important, especially on long-term charts, to go find previous support and resistance and use it based on price action. Here, we're doing it again right now. Let's check it out. Look at the QQQs, okay? So this is a good example now, guys and girls, of price action and it breaking through. This is a perfect example. We hit this once, we hit this twice, we hit this 3 times. Now we just got above this little price action. This is a signal for me to be long now. We've broken above all that price action. So it's telling me that we can get above this now and start going higher there. The way I would, again, guys, we don't give financial advice. I'm not telling anybody what to do. Don't run in and start making a trade now, okay? The way I would trade this as a technician is as soon as we got above our 200 EMA, I would have bought a little bit of it because it's telling me we're going to break out now, and then just start selling that trade as it goes up. But can everybody see how we hit this for like the 4th or 5th time and we finally got above it? Okay. So once we clear all that price action, it's telling us to get on the same side of the trade. And my target can be one of two places. Right here, this would probably be my target because that is the first high that we made. Okay. This would be my target. And I might even reverse myself there because this is price action, get out of my long and get short when it gets up to there. So in the trade, out of the trade, reverse the trade. That would be what I'm looking at right now. But very clearly, everybody who's here, can you see how we got over that after testing it several times and just took off to the races? That is where we use price action. And again, it's really just another technical that you use is price action. Yeah, I'll go to a daily chart. I'll go to a weekly chart. I'll go to a monthly chart sometimes because what we see on a short-term chart is going to be very different than what we see on a long-term chart. Like we can go back to the SPY. All right, let's go to the daily chart. And I guarantee you almost everywhere that I have one of my longer-term moving averages, we have some price action, okay? This was our longer-term one. We had some price action there. Now, this is a daily chart. You know, if you look at my next support on a daily chart, it's like 533, all the way down here, okay? Which would be all of this price action. This is on a daily chart. We hit this level right here. All of that would be a tremendous support level, okay? Because we had a bunch of price action here. We go there. Let me see if I can get weekly on here. Let's see. Even better. There we go. Okay, so this is our weekly chart now in the SPY, okay? So on our weekly chart, we didn't even quite get down to our 15 EMA, but if we did, this is the price action I'm looking for, right here. All this, everybody see? So right about here would be the spot that we would find support now, okay? That became resistance. So on a longer term chart, weekly is about 525 in the spiders. Could happen, guys and girls, but what I will do now is write that down, okay? Long term, weekly chart, 525, some nice price action there. So that's how I'll use it on even a longer term time frame. So let's look at Tesla right now, again, okay? And this is going to be a perfect example. We're starting to round up a little bit. Here is my price action, right around $200.80. And it just about lines up with my 200 EMA, right? So if we get up to this $200.80, right about there, I will be looking to short because it's going up to resistance. And it will have moved quite a bit to get up there, and it just about lines up with my 200 EMA. So I use the moving averages to tell me where to technically maybe buy a stock and maybe short a stock, depending on what kind of trade we'll get in. And if I have confirmation with price action, that makes me even more confident to do that trade. The more technicals we have setting up at any level, the more confident I'm going to be in that trade. Not even the more confident, the better the odds are that trade is going to work. And that's the most important thing, okay? By using our technical analysis or our price action, all I'm trying to do is put the odds of a trade in my favor of working. And that's all we can do as technicians. That's the bottom line. Technical analysis is all about putting the odds in our favor of our trades working. They're still not going to work all the time, especially as volatile as this market is. We are going to have losing trades, okay? Everybody has losing trades. Don't believe the internet. Don't believe TikTok and all those other nonsense places that all they do is post how much money they're making. No, it's impossible. I've been doing this for 35 years. I've probably had 35,000 losing trades, okay, over the years. The key is how you handle your losing trades. So let's talk. If it's all right, let's talk about this for a couple minutes. Trade management, okay? Because besides having all your rules down pat, which is having a stop order on every single trade that you do, which is not averaging into trades, okay? When I find the level that I'm getting into a trade based on price action or anything else, I'm doing my full trade at that spot. I'm going to have a stop order on every single trade and a plan to take profits on every single trade. If I have 3 losing trades in one day, I am done trading. It was a bad day. I will never turn a winning day into a losing day. and I will never turn a winning trade into a losing trade. Those are just some very, very simple rules that if you follow, it will make you a better trader right out of the gate. I guarantee it. So a lot of what we do is just in our heads, right? It's hard. Traders all make, Peter would call them Uncle Herbie on the internet. That's right. That's right. And what does Peter also say? If you're not following your rules, you'll be outside smoking a cigarette and drinking a bottle of Hennessy. That's what Peter always says. So trade management, once we learn how to do this stuff, is the most important thing. A huge mistake that traders make. Every trader makes the same mistake. Losing too much on their losers and not getting enough out of their winning trades. I have a plan on every single trade that I get in. I have a stop order on every single trade that I get in. Depends on what kind of different trade I'm getting in, okay? But there's still a plan. And I will never, ever push a button to get into a trade unless this little chart here tells me to get into that trade. I can tell you that good traders should be bored most of the time, okay? If you're constantly looking for things to get in, you're not being patient, you're not being disciplined, it's not going to work over the long term. I had a guy who joined our course in our room. I think it was at the beginning of this week, and didn't even start trading. I tell everybody not to trade while we're learning how to do this. Don't even trade. Okay. Looked at what we were doing, started to understand what we were doing, did one trade, he did great, did another trade, he did great, did another trade, he did fine. He decided then to go from doing 100 shares to 1,000 shares. Okay. And that time he tried to pick 1,000 shares, it was a losing trade, and gave back more than all the money that he had made. So you got to crawl before you can walk in this business also. Okay. You don't, because you're having some success, go from 0 to 100 in 30 seconds, right? I am also a big proponent of journaling every single trade that you do. This is mega, mega important. If you do not know what your hit rate is, what percentage of trades you're winning on versus your ones you're losing on, you cannot trade. You just can't. I have journaled thousands and thousands and thousands of trades, okay? For instance, I know this month, this whole entire month, on the trades that we did, we were about 82%. Okay, so 82% winners, 18% losers. Even that doesn't guarantee you that you're making money. Because if your 18% losers are twice as bad as your winners, you're still going to be losing money. So it's all about following that plan. We recognize we're in a bad trade very quickly, and we get out of it. It's going to happen. And we try to get the most out of our winning trades. But you have to journal your trades so you know that, right? If you don't know what your percentage is, and I want people to do this because that's when I want them to start increasing their size. When they have a proven track record, okay? I did 100 trades. I know I'm at 70%. I'm making more on my winners than my losers. Good. Now go from 100 shares to 200 shares. Go from, 500 shares to 1,000, whatever it is. The easiest thing that we can do in trading is put another zero at the end of what we're doing. It doesn't change anything, right? And also, when you get to the point where you're doing more, that should not change your plan. You're going to be making more money when you're right and losing more when you're wrong. But don't let it change your plan. Also, another thing, and I love talking about this stuff, don't trade your P&L. And what do I mean by that? A lot of times when people get into a trade, they're staring at their P&L, staring at it. And when they start making money, they're going to want to get out of it because they're making money. And when they start losing money, the tendency is to let it keep going. That's just our thought process. And we think, oh, it's going to turn around. It's going to turn around. No. I have a stop order on every single trade that you do. I don't look at my P&L when I'm trading. There's no reason to. I let my trades take care of themselves. I have a plan in every single trade that I'm doing. I'm going to execute that plan. If I'm hitting on my 80% of trades, I know I'm going to be making money, right? And as long as I don't lose too much on my losing trade. This is about, and this is, people get crazy when I say this, this is about the process, not about the money. Learn the process, and the money will take care of itself. It's that simple. Learn the process, learn the rules. The P&L is secondary, especially when you're first learning how to do this. what I do in our day is broken up into two very distinct parts, okay? I can tell you that today, this day is over, in my mind. It's 12 o'clock on a Friday. Everyone's in the Hamptons. They started their cocktail parties already. There's nobody around anymore. But we had a lot of volatility this morning, which was good. So usually the first hour, hour and a half of the day is when we're probably going to get like 70% of our trades, okay? Sometimes the last hour, hour and a half a day, we get a little volatility again. So I trade the morning. Everybody who's with us trades the morning. Don't look at your P&L. I know if I have enough bad trades, I'm going to stop trading, okay? But at like 11 o'clock, I'll finally slide my thing over and look at my P&L. If I'm at a number that I'm comfortable with and I've done well, I go home. Bye-bye. If I get at or close to hitting my goal, I am done. Most precious commodity in the world is time, okay? We did it this morning. We were done by, 10:15, 10 o'clock. Everybody emptied out. And I try to make them leave because I can tell you that it's not going to get any better than that. And then what happens is you get one losing trade. You say to yourself, I got to get that money back. You have another losing trade. I got to get that money back. And before you know it, you've given back your whole day and you're losing money. And then you just want to, put your head in the oven and turn the gas on, right? I don't want that to ever happen to anybody. That's why the psychological part of this is the most important thing. So I look at 11 o'clock, okay? If I hit my goal or whatever it is, I'm done. We go home. That part of what we just talked about is more important than price action. It's more important than technical analysis. I could teach anybody how to read this chart, guys and girls. That's not hard, okay? How to interpret it and when to get into trades, that's a little more complicated. But this is the easier part of what we do. There's no doubt that this is the easier part of what we do. My charts are going to tell me when to make trades, whether it's based on price action, moving averages, whatever it is. That's it. My brain has to get around how to execute the trades properly and how to follow all the rules. And we have questions of, as a beginning trader, what's the most important thing? That's the most important thing as a beginning trader. Don't even think about even putting any money on the line until you have that part of it down pat. So I tell people who are just beginning, how about trade one share? There's no emotion involved, none whatsoever. Trade one share, right? Get used to the process, go to 2 shares, 4 shares, 8 shares, and it's so easy to size up in what we do. But that is by far the most important part of what we do.
Do you have any suggestion for who works 9 to 5? Is it like swing trading strategy? Do you have any suggestion for who works 9 to 5?
Yeah, I mean, day trading is going to be almost impossible when you're trading 9 to 5. It just is. So what you can do, there's two other things you can do. You do options or you do swing trading. Mm-hmm. Now, we do swing trading, okay? We did it when the spiders hit that yesterday or the day before. It hit that big 65 weekly level. We bought a little bit and we held it overnight. That's a swing trade. 90% of the time, as a day trader, we're going home with no positions. Because you know what? I want to put my head on a pillow at night and go to sleep and not have to worry about, I have some people in my room, they're trading futures at midnight. They're trading China at 2 o'clock in the morning. Please, I have enough trouble trading what we're trading right now, right? I don't want to have any positions. I want to put my head on my pillow at the end of the night and have to worry about something happening in China at 3 o'clock in the morning, okay? But your other option is to swing trade. They won't set up as much because we're waiting for big outside moves for that to happen, right? But that's your only other option. If you can't be paying attention 100% of the time, I don't recommend to be day trading. It's that simple. And then you have your long-term investments and you manage those accordingly. Quick overview. When we're looking for price action, look for stocks to hit the same price, okay, whether they're going down or going up. Usually the first time it hits that same price, it's going to act as support, okay? Same thing if a stock is going up. Look for the price action going up. If it hits the same level a couple of times, that's going to be resistance. That's number 2. And we just showed you an example of number 3. And quite frankly, I love these all the same. We hit price action. We got above price action, okay? And check it out. This is the QQQs. We've gone up $1 now, right? This is the trade that we talked about a few minutes ago. Finally getting above that price action. And look at that nice movement once we got above, okay? And it hit my first target, this level. Boom. Remember we talked about maybe getting out at this level and reversing? Well, it hit that level and went down a little bit. So this would have been my trade. Get in above, get out right here, and we would have made $1 on the QQQs. So, I mean, if you have 100 shares, it's $100. You have 1,000 shares, it's $1,000. So that's price action. Look for support, look for resistance, look for it to break through a level. In a nutshell.